Hello and welcome to the April monthly update. I'm Shauruk Abdali at Saturn Advice. I'm a financial advisor. Before we get on to it, a bit of a disclaimer. So, nothing I say today should be taken as personalized financial advice. I do not know your specific circumstances. If you need tailored advice, please get in touch with a financial advisor. If you do not have one, well, get in touch with us. We'll be happy to help you. Um, I've taken every effort to ensure the accuracy of the information I will be presenting to you today, but I'm reliant on third party sources, so no guarantees on that. And if you act upon anything you hear today, you cannot hold me or anyone at Saturn Advice accountable for the financial outcome, particularly not the negative financial outcome. So we are going through a really uncertain period. Lots of factors keeping things hard to guess where we are headed. Uh, but let's touch upon some of the topics that I have identified for today. So COVID, we are moving on from COVID. The world is definitely moving past COVID. New Zealand, belatedly so, is making progress on that front, and it is really important to learn to live with COVID with proper protocol. Of course, keeping yourself safe is really important, but we need to carry on with our lives because if we don't, our consumer spending habits will get affected. The consumer spending will go down, and that is not really supportive for sustainable economic growth. And if economic growth is not sustainable, then that doesn't help anyone, not the businesses, not the share market. So it is pretty important for us to carry on with our lives with proper protocol. I will briefly touch upon New Zealand property. The last time I was talking to you, I had predicted that the property market had seen its best days for a number of reasons, and it was poised for a really flat to potentially declining period. And it seems like the house prices have stopped rising and might even be coming back a little bit. So I expect going forward, property prices to not really rise materially, at least, and potentially pull back until there's a significant change in the tax policies that have been introduced by the current government, or the tenant-friendly policies that were introduced by this government, because the interest rates are rising and they'll continue to rise. So it is not the same property market as we've seen over the past few years. So even then, I said the same thing. I'm saying that again. It is really important to diversify away your wealth from a single asset class. So for property investors listening to me, if your wealth is primarily based in property, please try to diversify across different asset classes and ideally across different geographic regions. If you are struggling to do so yourself, please get in touch with us. We are more than happy to have a free, no obligation chat with you to discuss your options. On the financial markets front, we've had a lot of volatility. We were early on in the year, we were already dealing with post COVID inflation. There was pent up demand, which surprised everyone, and supply was lagging because of supply chain disruptions and bottlenecks. And then we had this conflict. Russians decided to invade Ukraine. Really sad to see the atrocities of that war. I'm not going to go in those details; those are very well documented. But I will talk about the economic impact of that war, and there are heaps of impacts, but the most important one is the impact on inflation. So we were already dealing with inflation, record high inflation, and this war has added fuel to the fire. And inflation previously, before this conflict, our expectation was that inflation will peak somewhere around later part of this year, and then will start to normalize down as a result of the restrictive monetary policy introduced by central banks all over the world, New Zealand inclusive. But this conflict has thrown a spanner in the works, and there's potential for a further aggravation of inflation, at least for the short term. So that might mean that central banks might need to increase the interest rates at a faster rate than previously anticipated and previously priced into asset valuation. So rising interest rates are negative for asset valuations. I've explained that a few times earlier. Um, So what to do as an investor? So there are opportunities. The banking sector, for example, benefits from rising interest rates. Their net interest rate margin gets inflated. So, there are opportunities there. Also, inflationary environment is good for businesses which have pricing power. They can pass on higher cost onto their customers, which will give a boost to their revenue. So look out for those businesses. Commodities oriented businesses in general will benefit from higher commodity prices. For example, higher oil prices are hurting you and me at the gas station, but energy companies obviously won't be complaining from this higher oil prices. And we've got fund managers in our client portfolios which have exposure to the energy sector. So, while they might be hurting at the gas station from higher oil prices, they're benefiting in terms of investing in the energy sector. So again, comes back to diversifying away from just one asset class and one type of asset and across different types of asset classes. Uh, Lastly, businesses with strong balance sheet and high cash reserves will have the opportunity to buy out competition, particularly the weaker competition, which has survived through this COVID time period on government support, because the government support is going to be taken away over the coming months. It's already being wound down. So there will be opportunity for capturing market share for these stronger businesses. And if you are invested in those businesses, you can stand to benefit. So there are opportunities even in this high inflationary, rising interest rate environment, and heightened volatility. If you've got any other questions, any questions related to what I talked about today, please do get in touch. Here are the details for the business, contact details for the business, as well as us for myself. Do check out the insights on our website. We regularly post some really good articles and content there. Do check it out, and yeah, I'll see you next time.